In the next 15 minutes, I'll be walking you through the basics of getting started with crypto investments. If you're here, you're probably curious about how to tap into the potential of cryptocurrencies like Bitcoin and Ethereum. Crypto can feel like a whole new world, but I'm here to make it simple and accessible, even if you're brand new to the concept. In this video, we'll cover the essentials of what cryptocurrency is, how it works, and how you can start investing responsibly and securely. I'll introduce you to key strategies, reveal some secrets and techniques used by successful investors, and guide you through the safest way to get started. While the potential for profit in crypto is exciting, it's equally important to understand the fundamentals and avoid common mistakes. This video will give you the tools to approach crypto investing with confidence and set yourself up for growth. By the end of this course, you'll have a clear, actionable plan on how to begin investing, what strategies to use, and the mindset needed to navigate the highs and lows of the crypto market. Let's dive in, and by the end of these 15 minutes, you'll have a solid foundation to start your journey into the world of cryptocurrency investing. All right, let's start with the basics. What exactly is cryptocurrency? Cryptocurrency, or crypto, is a type of digital money. Unlike the money you keep in the bank or use every day, crypto only exists online. There are no physical coins or bills, and no central authority like a bank controls it. Instead, crypto is secured by a technology called cryptography, which uses advanced math to keep it safe and private. The first and most famous cryptocurrency is Bitcoin, which was created in 2009. But today, there are thousands of cryptocurrencies out there. Some of the most well-known ones are Ethereum, Cardano, and Solana. Each of these coins or tokens can have different uses, purposes, and values. So what makes cryptocurrency different from the cash or credit we're used to? First, it's decentralized. That means it doesn't rely on any one country's government or bank to exist. Instead, it's powered by a network of computers around the world. This makes crypto harder to control or shut down. It also makes it accessible to anyone with an internet connection. The technology behind cryptocurrency is called blockchain. A blockchain is like a public, digital ledger, a record of transactions that anyone can view, but no one can change. Every time a transaction happens, like when someone buys or sells a coin, it's added to the blockchain in a new block. Each block is connected to the one before it, forming a chain. This is why it's called a blockchain. Blockchain's transparency and security are what make cryptocurrency unique. Because the blockchain is public, it's very hard to cheat the system. And because it's decentralized, crypto transactions can happen directly between people without needing a bank or middleman to approve them. So to sum it up, crypto is a new form of digital money that uses cryptography for security, operates independently of banks or governments, and is powered by a transparent technology called blockchain. Understanding these basics will help you see why people believe it has the potential to change the way we use money. Now that we've covered the basics, let's move on to how you can start setting up to invest in cryptocurrency. Now that you understand the basics of cryptocurrency, let's talk about how to get started with investing safely and set yourself up for success. First, you'll need to choose a reliable crypto exchange. Think of an exchange as a marketplace where you can buy, sell, and trade cryptocurrencies. Some popular exchanges include Coinbase, Binance, and Kraken. When picking an exchange, look for ones with strong security features, low fees, and good reviews. You'll also want to make sure it's user-friendly, especially if you're new to crypto. Once you've chosen an exchange, you'll need to set up a wallet to store your crypto. A crypto wallet is a secure place to keep your coins. There are two main types of wallets: hot wallets and cold wallets. Hot wallets are online, which makes them easy to use and great for quick transactions. Most exchanges offer hot wallets for free, so you don't have to do much extra work. However, since hot wallets are connected to the internet, they're a bit more vulnerable to hacking. Cold wallets, on the other hand, are offline. These can be on a hardware device like a USB stick or even a piece of paper with a code written on it. Cold wallets are much safer from online attacks, but they can be a bit harder to set up and manage. Many people use hot wallets for everyday trading and cold wallets for long-term storage of larger amounts. After you've set up your wallet, it's time to make your first investment. A good rule of thumb is to start small. Only invest what you can afford to lose. Crypto can be very volatile, meaning prices can change fast, so it's best to start with a small amount and get comfortable with the process. One of the smartest things you can do at this stage is to practice patience and not rush into big investments. Take time to learn how your chosen exchange and wallet work and watch how the market behaves. The goal here is to build confidence and understand the basics before diving deeper. Alright, so to set up for success, you'll need a reliable exchange, a secure wallet, and a plan to start with small, manageable investments. This will help you get a solid foundation in crypto investing and minimize your risks. Next, we'll look at how to research different cryptocurrencies before deciding which ones to buy. Now that you're set up, let's talk about researching cryptocurrencies before you invest. Since there are thousands of cryptocurrencies out there, picking the right ones takes some homework. First, it's important to understand each coin's purpose and technology. Not all cryptocurrencies are the same. Some, like Bitcoin, are mainly digital money, while others, like Ethereum, have different uses. Ethereum, for example, is known for its smart contracts, which allow people to make agreements without needing a middleman. Knowing what makes each coin unique helps you figure out if it's worth investing in. A good place to start is by reading the project's white paper. A white paper is a document that explains a coin's purpose, how it works, and what it aims to achieve. You can usually find white papers on the project's website. Reading these gives you a clearer idea of what the project is all about and whether it has real potential. Another key factor is the community and developer support. Look for coins that have an active community of users and developers. A strong community shows that people believe in the project and want to see it succeed. You can check social media channels like Twitter, Reddit, or even Telegram to see how active and supportive the community is. It's also a good idea to check the team behind the project. Find out if the team members are experienced and if they've worked on other successful projects. If a project has a team with a strong background and clear goals, it's more likely to be reliable and worth your investment. So in short, before you invest, research each coin's purpose, read its white paper, check for community support, and look into the team behind it. This research will help you avoid risky coins and make smarter choices. Next, we'll go over some basic strategies for investing and growing your crypto portfolio. Alright, now that you know how to research different cryptocurrencies, let's talk about some basic strategies to help you grow your investments over time. These strategies will help you get started with a safer, more steady approach. The first strategy is called dollar cost averaging, or DCA. This simply means investing a fixed amount of money regularly, like every week or month, instead of all at once. For example, you might invest $50 every 2 weeks. DCA helps you buy in at different prices over time, which can reduce the impact of sudden drops or spikes in the market. It's a good way to stay consistent and avoid the stress of timing the market perfectly. The second strategy is called HODLing, which stands for Hold On for Dear Life. HODLing means buying a cryptocurrency you believe in and holding it for a long period, regardless of price swings. Many investors use this strategy because they believe in the long-term growth of the coin. HODLing is especially helpful if you're interested in coins like Bitcoin or Ethereum, which have shown potential for long-term growth. Next up is diversifying your investments. This means spreading your money across different cryptocurrencies instead of putting everything into one. Just like with stocks, diversification helps reduce risk. For example, you could put part of your money in a major coin like Bitcoin, some in an altcoin like Ethereum, and maybe a little in a newer, promising project. By diversifying, you're not relying on one coin to make or break your portfolio. Another important strategy is staying informed. The crypto market changes quickly, so it's essential to keep up with news, trends, and any big updates. Following reliable crypto news sites, social media, and updates from projects you're interested in can give you an edge. Sometimes a single announcement, like a new partnership or a major tech upgrade, can cause prices to move. Staying updated helps you make smarter decisions. So to recap, dollar cost averaging, hodling, diversifying your portfolio, and staying informed are all effective strategies for growing your crypto investments. These approaches help you manage risk and set yourself up for steady, long-term growth, even in a market as unpredictable as crypto. Next, we'll talk about some advanced tips and secrets that can help you grow your portfolio even more. Now, let's go over a few advanced tips and secrets that can help you grow your crypto portfolio even more. These tips can add extra growth if you already have the basics down and are looking for ways to boost your gains. The first tip is staking. Some cryptocurrencies let you earn rewards just for holding them in a special way. This is called staking. By staking, you're helping to secure the network, and in return, you get extra coins as rewards. For example, if you hold a coin like Cardano, you can stake it on certain platforms to earn interest over time. Staking is a great way to earn passive income, but make sure you understand the risks before you start. Another way to earn with crypto is yield farming. This is a bit more complex and is usually done in decentralized finance, or DeFi. Yield farming is when you lend your crypto to a DeFi platform in exchange for interest or rewards. While it can be profitable, yield farming is riskier than staking because DeFi platforms aren't always as secure. If you're interested in yield farming, start small and research the platform carefully to avoid scams. A crucial tip is avoiding FOMO and FUD. FOMO stands for fear of missing out, and FUD stands for fear, uncertainty, and doubt. These are emotions that can lead to impulsive buying or selling. For example, when prices are suddenly rising, you might feel FOMO and want to buy, even if it's risky. Or, if prices drop, you might feel FUD and want to sell everything. Try to stick to your research and plan instead of reacting emotionally. Finally, some investors try timing the market, which means buying low and selling high. This can be rewarding, but is also hard to do right, especially in a volatile market like crypto. If you're going to try timing the market, make sure to only do it with money you can afford to lose, and always rely on research, not just rumors. So those are a few advanced tips to help grow your portfolio. Staking, yield farming, avoiding emotional reactions, and, if you're experienced, maybe timing the market. These strategies can help you get more out of your investments if you approach them carefully and keep learning. Now let's wrap up with some final tips on staying safe and managing risks. To finish up, let's talk about managing risks and staying safe when investing in crypto. The crypto world can be exciting, but it also comes with risks, so it's important to protect yourself. The first step is only invest what you can afford to lose. The crypto market can be very unpredictable, with prices going up and down quickly. This means there's always a chance you could lose money, so make sure you're only investing extra money you don't need for daily expenses or emergencies. Another way to stay safe is by using secure wallets and strong passwords. When you're investing in crypto, make sure your wallet is secure and choose strong, unique passwords. If you're using an exchange, enable two-factor authentication, which is an extra security step that helps protect your account from hackers. Be wary of scams. Unfortunately, there are a lot of scams in the crypto space, like fake investment opportunities or phishing emails that try to steal your information. Always double-check websites and never give out your private keys or passwords. If something sounds too good to be true, it probably is. Finally, avoid making emotional decisions. In crypto, prices can be very volatile. When prices drop, it can be tempting to sell quickly, and when prices are rising, it's easy to feel pressured to buy more. But emotional decisions often lead to losses. Instead, stick to your plan and stay focused on your long-term goals. So to sum it up, only invest what you can afford to lose. Use strong security, avoid scams, and try not to let emotions drive your decisions. These steps will help you manage risks and protect your investments in the world of crypto. To wrap things up, we've covered key information today, from understanding cryptocurrency to setting up your accounts, researching coins, and using smart strategies to grow your portfolio. We've also talked about the importance of managing risks and staying safe as you invest. Remember, Crypto can be a great way to build wealth, but it's important to take your time, do your research, and stay patient. Start small, stick to your plan, and always be cautious with your investments. I hope this video has helped you feel more confident and ready to start your crypto journey. Keep learning, stay informed, and most importantly, have fun exploring the world of cryptocurrency. Thanks for watching the video. Make sure to like, comment, and subscribe for more. I hope you now feel more prepared to start investing in crypto safely and with confidence. Good luck with your investments.